Our topic today, we're going to speak about the financial inclusion. Actually, it's the subject of the hour and every hour. And I think we're facing lots of problems, lots of obstacles, and of course, lots of good things that are going to happen, inshallah, soon, hopefully. We'll address our panelists today and see what's the pros and cons in terms of the financial inclusion, what's the obstacles and what's the ads. So, good morning, everybody.
Good morning.
Okay, Sarah, why don't you just talk to us about the financial inclusion as a whole, from end to end?
Not end to end. Good morning, everyone. I think very few people have already made it to this very early session, our panel. First of all, I thank you for having me here among this panel of experts. Not end to end, however, as you said, a very interesting topic. I think reading through the questions and the objective of this panel, I believe there is more tackling the enablers or the enabling environments, and that is why I wanted to shed light maybe before the action plan of digitization and agent banking and the different tools and tactics. One step backwards, setting the scene, or the political will that actually characterized the starting phase of financial inclusion in Egypt. Government initiatives were therefore set forth by the state, by the country, in order to help everyone collectively work towards the realization of financial inclusion. So I believe between the years 15 and 16, we saw the political will explicitly expressed and sent out to the public. We saw the Central Bank of Egypt pledging to work with the 38 operating banks in order to find or create a solid platform of services and offerings to include the unbanked and underbanked segments. What we used to call high-risk segments, and to stop this practice of competing altogether to have a bigger share of wallet on the low-risk segment. So starting 2020, fast forward to 2020, we saw a lot of government initiatives such as the launching of Visa card, prepaid card, and in this aspect, I would like also to shed light on a very smart move by the government, giving subsidies to this low-income segment through this new method. So and of course, the disbursement of benefits of social protection schemes. So for a segment that is likely to refrain from exploring a new method of payment or going to ATMs, they actually linked a benefit with a new method. And at this point, I would stop at the government initiatives and pass on to my colleagues. If you have any questions, please.
Yeah, you mean that the government already set some incentives for the people?
Yes.
Pulling unbanked
segments.
Be banked. Okay, they managed to do that. Any statistics?
So far, we have like 30% only of that population. However, the practice itself, the promotion of the notion and the conceptualization of you can now go to the financial system and you don't have to be afraid. Your money is safe. You have to at least explore the action of going to the ATM. Of course, just talking about mature markets like South Africa, and I think Daniel will take us through this. Excuse my voice, I have a very sore throat. So, yes, you have to start with introducing the practice, and then you start to recruit more people as you go. So far, the efforts are very commendable by the government. I meant to mention the very little span of time. We started soft launching financial inclusion as only an awareness campaign in 2016. In 2020, you find a digitization for payments by the government for all utility bills or some utility bills traffic fines, etc. So actually, and in 2019, you have a strategy, a national strategy for artificial intelligence, and a center established to look after artificial intelligence, implementation, R&D, etc. So no, actually looking back at the sequence of things, it's actually taking some accelerated pace in the past few recent years. But since 2016, yes, we're behind. We're behind other markets. Of course, we're actually the exact reverse of South Africa, for example. They are 80% included and 20% unincluded. Yes. So, however, it is always good to start late and not to remain it altogether or to give up altogether, because also you take the learnings from other countries. So for a developing country like Egypt, North Africa, and the African region, no, looking at the actions taken by the government, it is not very developing country typical actions to have AI strategy, for example. So no, we are on the right track and the right path. However, yes, of course, there is a big room for it.
Sure. Thanks, Sarah. Thank you very much. That was a very elaborated speech. Mustafa. Hi. Good morning.
Good morning.
Why don't you talk to us about the financial inclusion? Specifically, I mean, definition.
First of all, I would like to thank the IIO for inviting me for this beautiful, innovative panel. I'm very happy to be at this panel discussion about financial inclusion and how to build the financial inclusion again. First of all, we need to think about what is financial inclusion before we can fill the gap of financial inclusion, whether it is in the Egyptian market, the North African market, or in any country in the African continent.
Let me interrupt you on this specific point. Are you talking from the Islamic banking point of view, or you take from the conventional bank? There is a difference. Please clear it.
Concerning the financial inclusion, I will speak about the financial inclusion from an Islamic banking perspective. When we start to look at the definition of the financial inclusion, it's about for the individuals and the businesses. Individuals and businesses want to reach and access their financial product and services like bank accounts, transactions, payments, insurance, and all of these payment methods in a responsible and sustainable way. When we shed a light in the world of responsibility and the responsible lending from an Islamic economics perspective, it's just like the contract of murabha. The contract of murabha in the Islamic banking perspective is that any client want to buy any consumable commodity. Say you want to buy a laptop. So the Islamic financial institution buy this commodity for him and resell this commodity for the client with a profit margin. The total cost is divided into installments for the client. So from an Islamic banking perspective, in a responsible way for the financial services and products, he assured that the loan or the murabha is directed to the purpose of taking this loan, not use it in another thing to buy another thing. Considering the other world, which is the sustainability of providing the financial service or product, it's a matter just like this individual start to buy this product or any consumer product, he want to pay the fees for his kids or the universities. He can go to any Islamic financial institution and sign a contract with him under the name of Igarib Khidmah. This contract is that the financial institution, which is an Islamic financial institution, pay for the service provider the amount of the fees that the individual want to pay for the fees for his kid. So, from an Islamic banking perspective, the responsibility and the sustainability of the financial service and product is in accordance with what we are hearing nowadays, the ESG factors, the environmental, social, and governance factor. The Islamic banking perspective is for the welfare for the societies. By the way, the Islamic banking and the Islamic financial service or product is not only for Muslim, it is for all and for any individual or any population. By the way, I want to add something, Mr. Ehab, concerning the financial service or product from an Islamic banking perspective and the rise of the Fintechs by the end of 2020 and after the COVID-19 and after the health care crisis that hit the world in March 2020, there is a rise in the Fintech companies, and so as to fill this gap, banks or any conventional bank or Islamic bank need to partner with the Fintech companies, because filling the gaps is very crucial nowadays, because Fintechs have used a breakthrough innovative business model that is in somehow different from the business model from any financial institution.
Right, that's very good. Danielle, good morning.
Hi.
Okay, I'm sure you have a lot to say about your experience in South Africa in terms of financial inclusion, respectively. And I would like to emphasize on one of the topics, because you're considered in South Africa as a successful experiments in the financial inclusion. Exactly what did you do to get the literate people into the system?
So I think perhaps there's a bit of a misconception about South Africa in that regard. So although approximately 80% of the people in South Africa are banked, the problem is that a significant amount of that 80% tend to remove their money from the ecosystem very quickly. In other words, they get their salary paid into their bank account, they go to an ATM, they draw cash, and they live off of cash instead of keeping their money in the banking and financial services ecosystem. Correct. So I think although we got it right to seemingly offer different products and services and encourage the population to obtain a bank account, we haven't successfully figured out how to have that population stay within the financial services ecosystem and move towards, digital currency and all of those good things that encourage financial inclusion. So I think the main problem for South Africa now, and where we could probably learn from other markets, is moving towards financial literacy, which is probably the biggest problem. If people don't understand why it's beneficial to keep your money in the financial services ecosystem or in the bank or in fintech, digital lending, platforms or whatever, if they don't understand why it's beneficial to do that, then they're not going to do that. And then we sit with the same problem going forward with people kind of putting money under mattresses and then wondering why it's not safe or wondering why they get robbed and then they have absolutely no money, etc., etc. So I don't think South Africa has gotten it right quite yet. I think we're getting there. And hopefully I think what my colleague said here is really valid, hopefully with the support of Fintechs, kind of supporting financial institutions, supporting governments, supporting customers and individuals themselves, and encouraging financial literacy, hopefully we'll get there one day.
I just want to comment on something. You mean that you have an 80% of the population are banked, but they are not using, they're not active.
Yeah, they're not active account users. So they have a bank account, maybe they use it once a month, okay, to get their salaries transferred into this bank account.
Still believe that the cash is the king.
Yeah, people trust cash, don't they? Specifically those that are financially illiterate. They trust cash because you can see it, you can taste it, you can smell it, you can feel it, you can hold it, you can go to a shop and I can give my money and get my change and know that a transaction has taken place. People that are financially illiterate, you put your phone to a POS device and you kind of have to trust that the transaction has gone through. You need to trust that my money is still in the bank account like they say there is. You have to trust that no one's going to be able to take what's mine. Where if I have cash, it's easy for me to protect and I'm not putting my trust in an institution in order to protect it. And that seems to be the mindset specifically of the majority of the population of South Africa because they don't really know any different.
Thank you very much. That was really impressive. 80% of the population are banked, but they are not activating their bank accounts. They still believe that the cash is the key. Did you ever consider knowing why people behave like this? It's because of the unjust or the doubtful financial system, for instance?
I don't think the banks or the financial systems are bad or that they don't promote the right sort of or encourage the right sort of movement towards being active users. I don't think that's the problem. I think the problem is that nobody has taken the time. This probably comes or stems from a government problem. No one has really taken the time to assess, okay, we need to start moving people away from cash because it's expensive, it's not protected. We need to start moving them away from that. And in order to do that, we need to start building their faith and their knowledge about financial services and how it actually works and how a transaction takes place and why is the bank safer than under my mattress. There's been a massive, massive gap in South Africa in financial literacy and teaching people how to manage their finances and why these things are the way they are. And I think should that have been put into place 10, 15 years ago, we would have seen a very different outcome. Now we would have seen 80% of the population banked and active. But now, because we've not done that, we're sitting with a bit of a problem where we're behind. Okay, although Egypt has, a small population that's banked, at least those that are banked understand that they need to be banked, right? Yeah. Where in this case, that hasn't happened. So I put it down to lack of interest in financial services or banks, as well as government, to actually educate people on why it is important to be active in the banking space. And that is a massive gap towards financial inclusion.
Yeah, but again, do you think that the government can still not push for obligatory transaction by the financial system, by banks? For instance, car license, taxes, those things, they don't influence that?
No, not really. So there are, for example, 3 major supermarkets in South Africa, all of which accept cash payments towards utilities, towards certain taxes, towards basically anything that you would think should go through a banking transaction. They accept it as cash. And this is an initiative by the government. Second to that, you have all of these major retailers that offer government subsidiaries, grants to people that are in a very unfortunate position, and they pay those grants in cash. So it's almost as though the government encourages the use of cash, which is weird considering it's harder to control. That seems to be
Plus even the cost of cash handling.
Exactly. Exactly.
All right. Thank you, ma'am, very much. We enjoyed what you have just said pertaining to the financial inclusion. Now comes to Mr. Amr Abdul Hamid. You are a unique person. You have supported us during you have supported me during this conference. And thank you very much for being there for us. I'm just wanna thank you in front of everybody. that you have done a lot of hard work to get this to me. Thank you. Thank you.
Thank you.
Okay, tell me, how the financial inclusion impact the non-banking sector?
Okay, financial inclusion.
And by the way, I need to clear something to the audience that Mr. Amri is working with the microfinance institution. So that might as well be twisted a little bit on what we're doing on the conventional banking or in the SMEs.
Yes.
Please.
Okay, financial inclusion strategy has a significant impact on the microfinance industry. So currently we are talking about open banking, AI, digital lending, and digital onboarding. So as a microfinance institution, we are committed to fund and exploring new channels beyond traditional offline channels to be able to reach our customers, underserved customers in rural areas. So currently we are active pursuing partnerships with merchants and aggregators among others. So and also we are developing our mobile application and digital platforms. By doing so, I believe we will reach the technology and the ability to streamline our operations, reduce cost, save time, and also minimize the risks associated with offline agents or loan officers. Yes, we have challenges, of course, and I would like to talk about one or two. I will start with financial illiteracy, but I believe the government are currently working on finding a solution for that by providing financial education programs. As example, youth program, women program, and also the Ministry of Education has integrated the financial education in the school curriculum. It's a really critical and big move. Also, I would like to talk about the physical signatures and physical KYC and physical contracts still required from our customers. And this is a big challenge. Yes, still we believe
that's an obstacle.
Yes, it is. And but actually, the regulators are currently working to launch the e-signature and activate the e-KYC and digital contracts. This will help us to digitalize our process and overcome these barriers and challenges. So, yes.
Very good, thank you very much. I just want to ask before you one question. Anybody has the ability to know how we're gonna push the literate people to go into the banking system while they cannot read, write, or even calculate?
Okay, to be honest, I believe this is not going to happen, to be honest, because illiterate people, they don't trust banking sector, to be honest. Because the relation also starts with...
That's what already Daniela just pointed out. Any luck? Any ideas?
To be honest, I'm telling you, I believe that microfinance companies are and Fintechs are the potential and they are the future of the financial industry. So yes, banking sector has a great role in the industry, but still the Fintechs are the future.
Okay. Thank you very much. Thank you all. It was a great session. This is a very hot session, by the way. And if there is any questions we can answer as a panelists, please, this is a very hot subject. Anybody? So please.
Hold on.
My name is Amr Al-Azma. I'm the co-founder and CEO of Irada Microfinance. I'm here to see my colleague Amr, and I'm very proud to be with everybody today. My question is directed to Daniela, actually, because I know that South Africa has gone a long way in terms of financial inclusion and the utilization of Fintech to get there. Can you just shed some light on the regulatory changes that enabled the environment to go in this direction, so we might learn from you how the regulations have contributed committed to both non-banking and banking institutions to push through utilization of fintech on onboarding or further enhancing the capacity of your institutions to onboard clients and have a proper financial inclusion strategy taking place in South Africa. And welcome to Egypt.
Thank you. So I think there's two parts that I can answer here. The first one on the regulatory changes, that's not really my area of expertise. So if you want kind of a more comprehensive answer regarding that, my CEO of the Fintech Association, Darren, he's over there, and he can give you a really clear answer on that. The second part is, perhaps it's important to take note that without Fintechs, in my opinion, in South Africa, it would have been very, very difficult to get to where we got now. Fintech supports financial services, it supports governments, it supports the individual and the consumer, all in a variety of different ways. Financial services, it bridges the gap between technology companies and the banks, right? And without that, we wouldn't have been able to get where we are now in terms of digital platforms for lending, et cetera, et cetera. Governments, because Fintech kind of spoke up and spoke about whatever regulations needed to change in order to enable financial inclusion. We're talking about changing things regarding KYC procedures and credit scoring, and how all of these things were enabled by Fintechs and assisted governments in actually figuring out where the problems were and how to solve them. And then to consumers, because, and I think this was further to your final question actually, how do you teach a consumer about financial inclusion if they can't read, if they can't write, if they can't understand English, for example, right? And a lot of fintech companies came in and started coming up with gamification and making financial education fun, or apps that used pictures and interactive platforms that didn't require reading or writing in order to teach people how to do these things. So yes, I think the regulation did change, and Darren can talk to you more about that, but without fintechs, I don't think South Africa would have gotten as far as it did in terms of banking the population.
Just one more thing. One more thing. Darren, do you like to comment on that?
Yeah, can just a second. You're making me work hard. It's going to make halfway.
Yeah, it's quite a deep topic, so I'm not going to cover it all. But I think the regulators, by and large, have been very supportive. And I think if you look at the history of South Africa, it's very different to the rest of the continent. With all the challenges that sort of went on, post-apartheid. Obviously, I'm not from South Africa, as you can tell from my accent, but I have been there 10 years. I think a lot of those challenges from post-apartheid really drove the government, drove financial inclusion, because they had to do that. When we look back, 20 years, and you look at the population, you look at who was banked then versus who's banked now, it's vastly different. So there was definitely a big focus. The regulators have been very supportive, not only of banking reform, but also of fintech innovation. And that's really driven the whole ecosystem forward. So there's lots of good things. I think, as Danielle mentioned, that there are definitely still some challenges. How do you keep funds digitized and just not withdrawn on payday, because that has a negative effect on financial inclusion, because you don't build up a credit score. If you're withdrawing your money straight away, what platform, what metrics can a credit scoring agency use if it's withdrawn in cash? So there are definitely still some challenges, but I think we're fortunate in South Africa that the regulator, or the regulators, because there are a number of them, have been very supportive.
Thank you very much. Any other questions?
Yes,
please?
we have one back
Good morning. I'm Suresh Iyer, ex-banker from India. I'd like to share some interesting things that happen in the financial inclusion space in India. It's an interesting case. In India, as you know, we are 1.4 billion people, and people below poverty line, maybe 20-25%. So what the regulator and the government, they sat together, came up with a very interesting scheme. They made all the banks accept accounts from these, customers who were not educated, who were illiterate. They were allowed to open account with zero balance. That was the first thing. And that account, yeah. So government has various social welfare schemes. So once the account is opened, since now in India everyone has a biometric enabled identity card. So with that card, they gave a debit card to these customers. So there was no need to sign. So with that card, they can walk into any ATM and withdraw funds. And the government brought in a very interesting scheme where some of the welfare schemes, as part of the welfare schemes, they transferred money directly to these accounts. So that was a huge benefit to this, illiterate and poor people who were earlier dependent on middlemen who were stifling the amount of funds. Then the government introduced accident insurance benefit. They introduced medical benefit. Overnight we could see, millions and millions of accounts were opened across the banking system. The interesting, in fact, bankers were very, very hesitant to allow, spate of new customers coming and opening account with zero balance. But it turned out that over a period, these so-called illiterate people, they too had some money. They used to keep it as cash. They started depositing it in the banks. So the overall bank deposits went up. So it became a win-win strategy.
Thank you very much. You have questions? Thank you very much all. Appreciate it. Thank you to the wonderful panelists. I really appreciate it. Thank you very much.